Hi everyone, and welcome to another technical look at the precious metals market. My name is Junior with Secure Metals Exchange. Today is the last day of March 2014, 11:38 a.m. Eastern Standard Time. Today I'll be doing a longer term analysis, monthly charts, weekly charts, as well as daily charts, and seeing if we can make a little bit of sense of this chaos in this market, right? So let's start with the daily chart. So daily chart here made a huge move from the low at 1180 to 1392. One of the one of the best the best performing assets of 2014 so far. We've gone up from the 1st of January, roughly from 1200 all the way up to 1390, up to almost $200. Now we're looking to consolidate a bit, and so let's look at these technicals, right? Oversold Stochastic, so we are looking for a little bit of a spike up. 20-day moving average has not crossed the 50-day moving average, so it's still fairly possible. So it's still fairly positive, but we are below the 20 and the 50-day moving average, currently above the 100-day moving average here at 1272. It does look like we are aiming for this level here, the 1272 range, which is the 100-day moving average, but not too much further down than that, simply because your stochastics are already getting oversold, and I see a lot of momentum in this move here. Okay, it wasn't like this move which was up, down, and up. This was a little bit more uniformed, and I like that a little bit better, right? Let's look at the fib level here from the bottom to the top. We're currently testing the 50% Fibonacci retracement here at 1285. Okay, we might also test this 1271 range, which is the 100-day moving average, as well as the 61% fib level here at 1261. What I don't want to see is a move below this level here. Right? I don't want to see a move below this level. Okay, because this is where we found some. This is where the rally started. The rally started here, comes up, trades sideways for. This is the daily chart, so probably for about a week and a half, 2 weeks. Trade sideways. Let me indicate some lines here, right? Trade sideways for a couple of weeks, and then we break out. So we're currently looking to retest this zone where this broke out here. So we might just test the 1271 zone, which is the 1272 zone, which is your 100-day moving average, and possibly the 61% fib level here. All right. So if that's the case, what I'd like to see is see a test here, and then start its ascend again. Okay. And a move below this level here, the 1230 level, would probably signal that this is what's going to happen, right? So this is what will probably happen if this thing continues to go down much further than the 1261. I would have liked to see support here around 1300 level. We didn't see that, so now we have to look for new support levels. This is your next level here. This is your next major technical level, right? 61% fib level. And you also have some nice, you also had the nice false breakdown here, which in turn equal to a fast move to the opposite direction and went up. Came back down here. We built a small head and shoulders and another big breakout to the upside. So we don't want to keep testing this level here. We keep testing this level here, we're going to be in trouble. But ultimately, we can retest this level here, 1260. And really see a nice future here for us. If we do fall below this level here, could be no bueno, right? If we see this thing test this level here, the 1230, 1233, 1235 level, and if this thing goes down further than this, then I think it's just inevitable that we're going to retest the 1180 zone. Now we've tested this zone here a few times already, right? We've tested this zone here 2 times. We don't want to keep testing it. The more we test, the more likely it is that we are going to break this level here, and now we're going to see another breakdown. So this is your weekly chart. Weekly chart, stochastics pointing down, so still further room to go down. Your 20-day moving average 1275. Remember, your 100-day moving average on the daily was 1272. So we have your 1275 range here. So their 50-day moving average, actually this is a 2-day, I meant the daily, but that's good too. I noticed something on the 2-day. I usually don't look at that chart, but anyway, 1272 100-day moving average on the daily. On the 2-day chart, 50-day moving average is 1271. On the weekly chart, 20-day moving average is 1275. So between 1275 to 1270, there's nice support, and that's a confluence when you have different charts indicating the same thing. So you have the weekly, the daily, the 2-day chart. Let's look at the monthly chart. No, nothing on the monthly chart besides this good level here, but nothing on the monthly chart. So a couple of charts suggesting that 1270 to 1275 might be the low. And also, I think you can draw a line here, which will also give you 1273, 1274. So, right, so you have this peak here, come over here, you see a false breakout, comes right back down, and we re-break out again. So again, this level is going to be very important to us. The 1275 level is going to be very, very, very important, because it might save us from further downside, and we can possibly go up from there. But at this point, is only time can tell, right? So that's your daily. Let's look at the monthly. I think that's the only one we haven't looked at. Monthly chart here. Again, fairly neutral. You have your stochastics pointing up, so still more room for upside. You have a nice bullish candle over here. Nice engulfing candle here. And now at this point, we just have to see if these levels are going to hold. But for now, these are the levels where we are finding some support. So anytime at least for now, it seems that every time we go in the zone here, this is a good buying zone. So anytime we look at a chart, we look for opportunities to go in and to look and to come out. This level looks like a great level to go back in, right? And this level seems, at least for now, like a good level, especially if you're doing short-term trades. If you're doing short-term, this level might be a good level for you to come out, right? So you can buy in this level and sell in this level. That's what it looks like, at least for now, right? 20-day moving average just cost the 50-day moving average. That's not positive. It's actually fairly negative, but I think the market has already priced this in. We'll see if it did, if this market falls below 1220 in the next coming weeks, right? Or this is a monthly chart, maybe next coming months. So that was gold. Let's look at silver now. Okay, silver, this is your monthly chart for silver. Same thing. You're looking for some support here. You know, anytime, especially silver, I like silver the best right now because there's not a lot of assets out there where you can invest. Just buy it outright, and you know, you have a high up here, another high, you have more highs over here, right? I'll make these red because these are your selling zones. So we want these red, or we sell for red, or we buy in green, right? All right, so these are your selling zones. These are your buying zones, right? So anytime you can get in, in the buying zone. And the great thing about silver is that you get in right now at $19, under $21. Really, your downside is you're looking at these levels here for downside, right? You're looking at these levels for downside. For buying. So if we fall above this level here, this $19 level, then chances are we might look to test this level here between $15 and $16. I don't think we'll fall that low, simply because silver production levels are at anywhere between $20 to $23. So again, any dips below these levels here will be short-lived, simply because of production cost. So we would see higher prices from here, and again, you can start taking profits here at around $31. That would be your first level to start taking some profits. But not many investments where you can say, you know what, fundamentally speaking, this metal looks really nice and oversold. They've been selling the crap out of this, and now we see a nice engulfing bullish candle here. Look at this really nice bullish engulfing candle here, and this is just one of those types where, again, now keep in mind, you see a bullish candle like this engulfing the other candles. What you do is you want to get in the middle of that candle. So you want to get in at 2164. 2164, which is the middle of this candle, or roughly 2150, let's say that is the middle of this candle. That's where you want to get in. If you're able to get in at the lower level of this candle, you're getting in at even better, because again, this candle is targeting roughly this area here. So not a lot of, I don't know of a lot of equities or a lot of plays where you can buy conservatively. Look at the market. Okay, Yellen's still printing money. I have some comments from Yellen this morning. I'll also put that up in this video as well. That'll be at the end. But not a lot of opportunities like this. You can buy silver right now at $19, under $20, and in my personal opinion, you're looking to at least make 50% of your investment within the next within the next year and a half. You know, we can't keep printing money forever, and that's the only tool they have. It's funny how the Fed works. You know, they print money, they lower interest rates, and they make believe like they have all these tools to stimulate the economy. But the fact is, we've only seen two tools that they've used, which is interest rates and the money press. They can't lower interest rates any lower, so that's why they've been printing since 2008. Fed balance sheets at $4 trillion. That's not positive. That's not good. There's nothing positive that's going to come out of a $4 trillion balance sheet. And guess what? You and I have to pay for it, right? So we're going to have to pay for it either through higher taxes, or we're going to have to pay for it through indirect taxes. And that's what inflation is. And inflation is an indirect tax. So we have to see higher inflation, we have to see higher prices. If inflation continues to decline, that just confirms more failed policies, because the current policy they have of printing money is not working. And all that means is that they either have to get out of the way or print more money. I think that they're going to continue to print more money. So even if they continue to taper at a decent pace, which is 10 billion, I still think that when we completely taper, when we have no more money, or we're not printing any more money, I think what we're going to see is we're going to see a dip in the equities market, and then they're going to have to restart printing again. So either they're going to slow down the printing press and then start it back up again. And I think I have evidence that they're going to start it back up again, or not continue to taper in just a few minutes when you hear what Janet Yellen said this morning. So again, just a beautiful opportunity, guys. $19, under $20. What are you risking? You're risking, this is your risk right here, right? You're risking, this is your risk. Your risk is that this is going to go down maybe, and this is maybe $3 or $4 down to, let's say, it's $15. That's $4 away, guys. So your risk to reward is $4 or a possible $12 to $13, $14. I mean, and in reality, if you want to do the math, that's not what I believe. I think that it's basically a $3 to $4 risk to make a $20, $30 upside. That's what I believe. But you know, if you just want to look at this technical chart and say, you know what, I want to get in on a technical trade, that's what you do. You buy here and you sell up here. Easy, 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 easy. And that's your monthly chart here. Let's look at your daily chart. Daily chart here for silver, looking for a breakout. The Bollinger Bands are contracting here. For those of you who don't know what the Bollinger Band is basically this band, this purple band around the prices. And we can see here that when the Bollinger Band is big, we have big volatility. When the Bollinger Bands contract, we have little volatility, but we always expect a breakout. So here they contracted, we got a breakout, right? Here they contracted, we had a breakout right here with this contraction here, right? Look how skinny it was, and then it just a super duper breakout. And if this indicator is anything of what can possibly happen here to the upside or to the downside, when these Bollinger Bands come together the way they're coming together here, we're either in for a big move to the upside or at least another move to the downside that's going to bring this thing to at least this level here. Now, let's look at more technical levels that we can look at, right? Another one here. Actually, this is the one you want to look at, right? You have one there. You have another one here, right? So technically this bull market's not over until this thing tests the $14 range and falls below it. This is your last major league low. So unless we break this low, and I don't see prices going down to $8 anytime soon, technically we're still in a really, really nice bull market. And it looks like, I mean, if you're looking at this chart, it does look like this area here between 18 and 19 is really the deciding range if this is going to come back and test this level here, the 15-16 zone, which is really technically the next level that we should see if we fall below this level. But again, downside risk of $3 or $4. You continue to buy if this thing falls down below, and then you just wait. You wait because the Fed does not want these prices to continue to go down. If silver and gold continue to go down, that means that prices are going down. Deflation is the Fed's mortal enemy, right? This is your weekly chart here. 20-day moving average pointing sideways, right? Just like gold, we haven't seen this 20-day moving average has really been what's been setting the tone here for the metals. So when we're above the line, this 20-day moving average, we're going up. When we're below this line, we're obviously going down. So we didn't really see a test of this 20-day moving average since December of 2012. Actually, we did test the line back in February and January, but again, fell below it. For the first time in about a year almost, we went above it and were able to stay above it for about, I would probably say 7 or 8, 9 sessions. This is a weekly chart, by the way. Each candle represents a week. And again, above it for another 5 or 6 sessions, currently below the 20-day moving average. But again, these Bollinger Bands are contracting. I am expecting to break out to the upside because we have a lot of nice momentum, okay? And your last chart is the daily chart. This is your buy zone here. Anytime we come at these levels, this is where we buy. But we've already accumulated at these levels. We don't necessarily want to accumulate more unless it's new, unless it's a brand new positions, right, at these levels. But again, the more we test these levels, the more likely it is to break. I have nice bullish divergence. This line goes down, this line goes up on both gold and silver. So we have a nice bullish divergence where this line goes up and this line goes down. So again, I am expecting a test of at least a 2050 zone before we continue to go down further. Let's see if we get that though, because the market has been very shaky, right? And let's look at the Dow Jones, just for the heck of it, right? 16,426. Dow up about 100 points today. On the daily chart, it is looking like it might try to retest this high here on 16.5. But again, they're taking away the punch bowl. I don't know that this Dow Jones has the wheels to continue to go without the stimulus. Now, what I did find, and again, this every time I look at this monthly chart, this is just the ugliest setup. This is called a broadening formation where the prices continue to broaden, right? You have a high followed by another high, a low followed by a lower low. So lower lows and higher highs. It's a broadening formation, very bearish. And I'll say it again, within the next 3 to 5 years, I am expecting prices by at least 2016. I do expect the Dow Jones to be somewhere in this area here, 10,000 and below. Scary, huh? Well, charts don't lie because they can't talk. And that's the monthly chart. Weekly chart here, again a bit overbought. So would look to see a little bit of consolidation, at least back down to the 15,000 range. We'll see what happens. They are taking away a little bit of the stimulus every couple of months, so let's see what happens in the next coming sessions, right? And that's your again, Dow Jones at a high. Do you want to keep buying at a high? I think that's silly, but hey, you know what? To each his own. I rather look at gold and silver, and I rather get what's on the low side, right? Kind of like this. Let me show you this, right? This is your Australian dollar. Australian dollar tends to correlate positive with the metals. It's a good currency to have. Australia is not as crazy as these other countries, where all they do is devalue their currency. But in the same respects, they do have to compete. So I do expect them to do so, anytime soon. You know, they were talking about the Australian dollar versus the New Zealand dollar. I mean, you tell me if that doesn't look attractive for a buy. I mean, you know, what are you waiting for, right? Look at this. This is a buy zone here, right? This is a buy zone. This is your sell zone here. This is your sell zone here. This is your sell zone here. I mean, you buy at the lowest, you sell at the high. I don't care I don't care what the fundamentals for the Australian dollar and for the New Zealand say. This has to go back up. You know, I don't see this chart disappearing and us forming a brand new section here of this chart. It doesn't work that way. That's not how charts work. You buy at the highs, at the lows, you sell at the highs. Get yourself some Australian dollar versus New Zealand. That's a great trade. My personal opinion, right? So that's how gold and silver look to me. Thanks for joining. Oh, yeah, I wanted to show this here. This is what Janet Yellen had to say this morning.
We have breaking news from Janet Yellen, chairman of the Fed. She is giving a speech in Chicago. It really was about communities, but here's the headline here. My colleagues on the FOMC and I estimate that the unemployment rate consistent with maximum sustainable employment is now between 5.2% and 5.6%. That, of course, well below the 6.7% rate in February. Is she changing her target in terms of unemployment here? She says the rate consistent with maximum sustainable employment is now between 5.2 and 5.6%. Savita Subramanian here with me. I mean, for the longest time, she's been talking about a target of 6.5% before she starts raising rates. Do you think she's taking that target down to 5.2 to 5.6% now with this comment?
I mean, I think it's early to say, but I don't think it's that big of a change from what the Fed has been signaling.
Did she just say that it's not that big of a change? It started at 7.5 to 7.1 to 7.25. Then it went from 7.25 to 7, from 7 to 6.5 to 6.25. And now they're saying that they're probably going to need to stimulate until unemployment is at 5. An excuse to keep printing. Remember, when they print, we have to pay it back to the Fed, which is a private entity. But most people think federal means that it's owned by the government. But it's as public as Federal Express.
Over the last year, which is that they're waiting for employment to firm up before a point at which they're willing to tighten. Yeah. So I think that on a numbers basis, it could be a little bit different, and it might be too soon to say whether this is a formal reduction of the range that they're watching, but it does feel consistent with their comments.
Yeah, it looks like the market is reacting. We're at session highs here with a gain of 144 points on the Dow Industrials.
Now, by the way, the Dow Jones has been up since last night, Sunday evening, and it has absolutely nothing to do with her comments, because she spoke roughly at around 9:45, 9:30, and the Dow was already up 100 points when it opened. So actually, I think she spoke close to 10. So unreal what these guys will say. But
she says still considerable slack in the labor market, which is why I think there is room for continued help from the Fed.
Nice, continued help from the Fed.
Continued help from the Fed. Does she back away from $10 billion taper every month till the end of the year? I don't know.
Open question.
Open question there. Based on evidence available, it is clear that the U.S. economy is still considerably short of the goals assigned to the Federal Reserve by Congress. So we've got a new range that she just threw out here. First time we've heard 5.2 to 5.6%. We've got still considerable slack in the labor market, why there's still room for continued help from the Federal Reserve. And we got a market that's trading near session highs, up 140 points. Would you put new money to work in this market right here, Savita?
I would.
Of course you would. Dow Jones is a great buy, 16.4.5. Phenomenal buy. Go for it. So at any rate, guys, that was it. Not much more. Just wanted to get this out to everyone. Make sure we understand that the Federal Reserve, their goal is to continue to print. The more they print, the more money they make. Everything we give back to them, it's completely free money to them because the money never existed prior them printing it. So again, something to keep in mind. These guys will continue to print no matter how good or how bad this economy is. They're always going to look for an excuse to continue to print because that's the only thing they can do. So that's about it, guys. Thanks for joining me. Hope you enjoyed the video, and we'll see you next time. Bye-bye.